Good day, ladies and gentlemen. Welcome to my channel. Today is December 9th, 2023, and I'm going to discuss gold, silver, and junior silver miners. What a wild ride. Gold did exactly as I forecasted. However, final result was quite the opposite. It broke out at the opening in the Asian session, surging to my $21.50 target, but then sharply sold off, catching most by surprise. Out of all possible outcomes, gold did the worst one, as usually. A slightly better than expected job data last Friday, which surely could be revised down the road, was a catalyst for Friday's massacre in the precious metals. As of recent peak, gold not only lost 5.5%, but also tested $2,000 mark once again. However, managed to close slightly above. With the benefit of hindsight, I can understand now why it happened the way it happened. A triple top was an obvious formation, and most late or novice buyers who were after easy money banked on this breakout, which should have resulted in a parabolic price action. As limit orders triggered overnight, all those trades became profitable, but only for a few minutes. Most of those buyers were in loss in a few hours. Majority of stops on standing limit orders banking on a triple top breakout were placed at 2050, 2030, and most experienced ones with deep pockets placed them around $2000 and $2010 level. Gold dived as low as $1995, turning all those easy trades into a painful experience. By now, market shook out most of the weak hands, and those who are able to hang on will likely not give up. So there is no point in pushing gold significantly lower from present price level, since it would be a gift for those who would like to double down or add fresh positions. I can't rule out another shallow pullback, but that would be largely it. As a precious metal investor, I am prepared for such sneaky and unexpected attacks and actually start enjoying them. I don't even like what I say, but understanding the game makes you so much comfortable. If I were in charge of gold market with an intention to constantly shake out as many investors as possible, that is exactly how I would run the show. Precious metals trading perhaps is the toughest market to trade. That is why I enjoy it so much, although even for me it is a painful experience from time to time. Let's go back to a technical analysis. Leaving all the hype and emotions aside, gold is doing what it has to do. It is retesting a 7-month formation, which it recently broke out from. Gold didn't have to come all the way to retest its former resistance, but it did. I'm glad it did. If retest holds and gold goes back up, then it is a legitimate price action. With FOMC out of the way next Wednesday, I would largely expect gold to range trade around $2000 to $2035 level next week. It is also typical for a gold to produce a year-end rally, so perhaps gold could finish 2023 around $2100 level. Silver's price action was simply insane. A false breakout from a 3.5-year giant formation was engineered to bait as many traders as possible. I don't remember 11.5% decline in a single week over the past 3-4 years without any legitimate reason behind. It is apparent that it was engineered price action. We all know what comes next, a pushback in a similar proportions. Junior silver miners, SILJ, a week ago tested a 3-year resistance and backed off. However, against 11.5% drop in silver over the passing week, SILJ lost only 6%. Yesterday, silver sold off by 3.3%. However, SILJ lost only 1%. Such price action suggests that miners do not believe into a recent sell-off in the precious metals. Most likely it is a final fake slam ahead of a legitimate rally. This is it for today. Stay well and enjoy the weekend. Please note that this video is not an investment advice and prepared solely for educational purposes.